It's true what people say. Money talks. With Tackle Trading's Forex Report, you'll always be privy to the conversation. Ooh.
Welcome to Tackle Trading's Forex Report for the week of January 25th, 2016. You know, for the last few weeks, we've been kind of waiting and seeing and just kind of buying time, and there hasn't been really anything fantastic and beautiful in the Forex market, as everything was, we missed the trade on the yen, we missed the trade on the pound over the holiday season, and because of that, they got overextended, and a lot got overextended, and some stayed range bound, so there wasn't a lot of, potential trades out there in the report, and we're starting to see something set up right here in the marketplace this week, and whether or not the retracements hold or whatnot remains to be seen, but I am liking a few of the technical patterns in terms of buying the dollar this week against a few of the major currencies out there. But we do have a lot of central bank news this week. We have a lot of economic news, and that's kind of where I want to start here, is I want to look at the economic calendar. Now, as you can see, we're just going to kind of update you on every single one of the economic reports that comes out this week, talk about them. The entire world is focused on inflation right now, with the Australians coming out on Tuesday with their CPI report. If you trade in the Aussie dollar, that's something to be concerned about. But on Wednesday is when the economic week really starts, with the FOMC policy statement coming out on Wednesday, the RBNZ, that's the Royal Bank of New Zealand rate statement, coming out on Wednesday as well. And then you have the Bank of Japan coming out on Thursday night, early Friday morning. You also have some GDP numbers coming out in England for the British pound, as well as for the United States from an economics perspective. And my read on from the economics perspective is, quite frankly, both of them should come in some degree of economic stagnation. Now, what economic stagnation is, it's when you have zero growth to the rate of inflation growth, which is typically in the U.S. about 2 to 2.3%. And that's where we're at right now from an economics perspective. We're not growing. We're not in a recession. However, we are in some degree of a recession in other facets of the marketplace, such as manufacturing data, such as revenues, corporate revenues from an earnings perspective. So there is some recessionary indicators out there, and with the strength of the dollar, that's a little bit more concerning over there out there everywhere in terms of the world marketplace. But we are economic stagnant. So is the United Kingdom, and I expect that to continue with the GDP reports from this week. I specifically want to talk about the central banks because of their role in terms of the market movement. And last week, let's first start there with a couple banks from last week, see how they impacted the marketplace. First of all, you had a couple banks announce monetary policy last week. The first one was the Canadians. The Canadians shifted course and surprisingly showed an increase in their GDP, an increase in their monetary policy with an uptick of 25 percentage points to 0.50. That was on Wednesday at 10 a.m. Eastern Standard Time. And let's go look at the Canadians here really quickly. Right now, this is last Wednesday, and so as you can see, it initially jumped up before it came back down, and the dollar therefore came down into support. As you can see, it coming back down into a support level after that rate announcement came down, with the dollar coming down in value, the CAD going up in value, and that's exactly how it should have played out with what the Canadians did on Wednesday. We'll talk more about that from a technical analysis perspective here in just a moment. The Europeans then came out on Thursday, and basically their interest rate remained the same. They held pat with what they're doing from a monetary policy perspective, and initially it jumped down, came back up, volatile session. It still held its trend. It is still in a slightly bearish trend. So a couple surprises from last week, but nothing too big of a deal here. What we're looking at this week is we're looking at the Fed with the FOMC on Wednesday, RBNZ on Wednesday, and the Bank of Japan. I don't expect the Bank of Japan to do anything. I don't think the Fed's going to do anything. I don't think New Zealand will do anything either. So I think it's going to be a lot of build up to not a whole lot of action in the market this week from a central banking perspective, and specifically on the Fed, the FOMC. I don't see them shifting course from a normalization of monetary policy that's been 9.5 years in the making when you've had just some market volatility over the course of the last 3 weeks. So their long-term projections on the economic systems, on the economy, they're all fairly healthy. Now, I obviously disagree with that. I disagree with the read on manufacturing. I disagree with the read on housing. I staunchly oppose the read on unemployment. I disagree with their read on GDP. And so I disagree from an economics perspective on pretty much almost everything that the Fed is looking at, especially in terms of future projection based on corporate revenues, based on the strength of the dollar impacting the market revenues. And so when we're looking at this, I obviously disagree with it, but at the same time, the Fed's not calling me, and the Fed is not worried about the short term. They're thinking this is more of a longer term thing, and I think they're going to continue to see this play out over the better part of this year. So I do not see them shifting in any capacity in this short term. But if you're going to be trading the dollar, the New Zealand dollar, the Japanese yen, you gotta watch out for those announcements. Obviously, as you can see with the CAD and the euro from last week, you can get a little bit of a whipsaw impact where quick movements one way or the other. And then if you're also trading the CAD, the dollar, or the British pound, all of those announced GDP and all of them are expected to come in some degree of economic stagnation. Let's go on to the technical report. As those of you who are new to the Forex market and the Forex report, I analyze the major currencies each week against the dollar to see if there's any potential setups on the bull side or on the bear side. And last week we really didn't do a video-based report. I updated everybody in Tackle Trading at the Coaches Show on Tuesday, and I was only looking at really kind of one trade last Tuesday, and that was on the euro dollar on the downside. I liked it on the downside. I still like it on the downside. We're going to keep our stop loss above 1.09. So no new trades announced on the euro dollar. We're going to just keep that on. It's some. I don't love it right now, but there's nothing that has changed to impact the marketplace from a trend or a directional perspective. This is still a slightly bearish downtrend with resistance right here at the 109.20 barrier. You also have a resistance at 109.70, and you have a resistance at $1.10, which everybody who has listened to the Forex report in the last 6 months knows $1.10 can have a severe impact on the marketplace. On the yen here, however, I'm looking at the yen right now, and as you can see, I've drawn my Fibonacci's. They're the yellow lines here, and as you can see, there's coming back up in price, and they're starting to get back up into that 38.2% retracement, which is right here. I like this from a short perspective. The yen has been very strong against every currency out there. I like a short dollar on a long yen pair here, especially with how I like the dollar against some of the other currency pairs this week. So I like the retracement back up into the 38.2%. I like this candlestick pattern. This is a slowing momentum candlestick pattern called the bearish harami. Any downward movement in price underneath intraday support levels, which looks at 118.35 is where I'm looking at. That's a potential short on the downside. And like I said, the yen has been very strong against all the other currencies out there. And so we're just kind of looking at a potential to get into a trade that has been fairly aggressive to the downside. So we're looking at short dollar, long yen, underneath the $1.1835 with the stop loss up above resistance levels. On the pound dollar here, we missed this one right here. I don't regret it. I don't chase, but we did miss this one here. We're overextended to the downside, and now I'm starting to see something fairly similar right there. However, I'd like to see a deeper retracement. Let's get into that 20-day moving average and then potentially short it at that point. So I do like the fact that it's starting to retrace back up into resistance. Let's let that come to some degree of conclusion before we jump all over it. Next is the Australian dollar, US dollar, like a short Aussie pair here. Very similar to the Japanese yen, 38.2% retracement, slowing momentum. This is an inverted hammer candlestick pattern with a downward movement in price. That is called confirmation. We hit it right there. We're going to hit it again. Let's see if we can go 2 for 2 out of the last few weeks on the Aussie US dollar pair. And the last two pairs we're looking at is the US dollar CAD pair. This one's easy for me. It's a long dollar versus the CAD. It's got a bullish harami candlestick pattern. Upward movement in price is what we're going to be waiting for to break out potentially of resistance levels, which is $1.4217. So we're looking at that right right now, but love the retracement here on the dollar CAD pair. The position trade we're still in. We had a stop loss underneath the $1.39. This time we're going to trail that stop loss up above below $1.40. So that position trade we got into last October, we are continually trailing that stop loss up, thus locking in profit. I do like a new swing trade though. We've done this before. We've nailed them both. Let's go ahead and hit it again on the next swing trade. And just to kind of update you on a potential target here, you're looking at a potential 700 pip range on the first movement and a 800 pip range on the second movement. You got a range bound of about 750 pips here. And so when I'm looking at this here from the bottom up here, about 750, you're looking at about $1.4850 target based on potential average yield on the US dollar CAD pair. And then lastly, on the dollar Swiss franc here, nothing to see. We got a position trade ongoing right now that's underneath this level of support. We're not going to do anything with it. We're going to continue to move in the same direction that we have, and that's been on the bull side. The CAD pair doing good. The euro's up. The CAD's up. We're 3 out of 3 so far in the last week with the continuation of those two position trades. We're looking at trades on the US dollar, Japanese yen, the Australian dollar, US dollar, and the a new swing trade potentially on the dollar CAD pair. So happy hunting in the Forex market this week. My name is Matt Justice. This is Tackle Trading, changing lives one trade at a time. Get in the game.
Everybody knows that money talks, but what they don't know is just how sexy it sounds when it does. Tackle Trading's Forex Report will really turn you on.